Assalamu alaikum wa rahmatullahi wa barakatuh. Welcome to everyone here. Thank you to Imam Muhammad Masri, Imam Noor, for hosting us this evening in what is arguably one of my favorite destinations around the country, one that I've been coming to for nearly 22, 23 years now. And thank you for sharing your background in all of this and how you were instrumental, Imam Masri, in planting the seed in our chairman's mind about the need for this program. That was a wonderful story. So as Salman mentioned, my name is Hussam Qutb, and I've been with Guidance Residential for nearly, 2003, so that's 22 years. I've seen us grow from 3 or 4 states to now, alhamdulillah, 34 states around the country. My goal tonight is to help educate you through the understanding of why we exist, the understanding of our journey to getting here, and how we're different. So without any further ado, let's dive right in, because we have a lot to cover. So we're going to talk about the sort of, you heard a little bit about where we came from Imam Masri. But I'll give you a deep dive into who we are, so you really truly understand who Guidance Residential is and who owns Guidance Residential. We're going to talk about why Islamic finance does matter more than ever today. And then, of course, how is it different? How is it different than conventional finance? And then we'll quickly go through some of the biggest myths, and there's a lot of myths out there, so we'll hopefully debunk a lot of these myths. You've seen it behind me, you've seen it now on the screen. You must know by now that we are not a bank. That is by design. It wasn't something we stumbled into and decided to be just a financial services company, but we are not a bank by design because that matters to us, and it will matter to you after you hear what we have to say tonight. And of course, what we do is crucial, as Imam Masri mentioned. Empowering our community to become homeowners is key, but doing it in the proper manner and avoiding riba is an even bigger mission of ours. So who are we? Our parent company, its name is Capital Guidance. So the gentleman that Imam Masri mentioned, Dr. Hamid Hamoud, who he visited with, he's managing director of Capital Guidance. That is a family company. It's a private equity group, Muslim-owned, global in nature, in many, many countries around the world. It's a 60-year-old organization. It is the organization that started Guidance Financial Group and Guidance Residential. You'll see all the guidances here in front of you, with Guidance Financial Group being the global operation for Islamic finance internationally and nationally, and then Guidance Residential, the organization you're here tonight to learn more about. This is our Islamic home financing arm. You also see Guidance Home Services and Guidance Securities. Guidance Home Services, for real estate agents who are here with us tonight, it is our way of interacting with the real estate agent community. It runs a network of close to 1,600 real estate agents that have been pre-screened who understand our community well and understand our program. They're members of Guidance Home Services Trusted Network that we refer our home buyers to when they come to us without representation in that space. So it's important for us to talk about that if you're a real estate agent, maybe later on tonight. We'll be here. Guidance Securities, Investments, I must let the cat out of the bag a little bit. But yes, we have an investment program through Guidance Investments that we're launching this year. Perhaps our CEO will talk a little bit about that later tonight. But we are a company with a values-driven mission. It's to develop Islamic financial programs for Muslims here in the US and abroad. This is where we operate today in the United States. We are licensed and operational in 34 states. We've provided, yes, over $10 billion, that is true, helping over 40,000 families achieve the dream of home ownership without participating in usury or riba. And this has been a journey that's now, since launch, 23 years later, but we really started even before that. We started in 1999-2000 with a multi-million-dollar research and development budget that involved 18 law firms that specialize in US housing finance. We brought those law firms and worked directly with scholars, as Imam Masri mentioned. 7 of the world's leading scholars in Islamic financial transaction laws. They worked with this team of practitioners in the field of economics and finance to develop this program. An undertaking like this has never been done before. Between 1999 and 2002, what was developed was something truly, truly incredible. The program that was developed out of this, called the Declining Balance Co-Ownership Program, it did also involve Freddie Mac's entire legal division to work with us to create this opportunity for Muslims to be able to achieve home ownership in a Sharia-compliant manner. An incredible, incredible undertaking, and from soup to nuts, we built this program with those things in mind: compliance with Islamic principles and compliance with US laws. This is the Sharia Supervisory Board members, the scholars who helped us develop this program. They audit us once a year, every year, to ensure that we're still abiding by those standards. Our program has not changed since 2002. The gentleman that Imam Masri mentioned is there in gold, Mufti Muhammad Taqi Usmani. He is arguably the leading scholar in Islamic finance globally today. And he's been the chairman of our supervisory board since inception, even prior. So riba, you've heard that word a lot. And for many Muslims in this room, you know that it's haram. And for a lot of us, it almost stops there. Our knowledge of it isn't very deep. It's just that it's haram. We don't really know why. Sometimes we can maybe theorize why, but in the Quran it's very clear. Those who take unlawful interest will stand before God, Allah, on the day of judgment, as those whose minds have been corrupted by the influence of Satan. They say that commerce is just like interest, but Allah has made commerce lawful and forbidden interest. Even during the time of the Prophet ﷺ, people were confused. Where you can see here, they say that commerce is just like interest. So it's natural to not have the true understanding of what riba is and why it's such a cancer in society. So what is it? Well, it's profit collected or paid out on a loan transaction. Simply put, lending money at interest is prohibited. That interest is regarded as riba. The reason why is lending money from an Islamic perspective is a charitable act. It's not a commercial act. It's not an act of trade or investment. It's relegated and must be kept in the charitable umbrella group, so to speak. You have abilities to support one another during hardship, during times of difficulties, and lending money is that vehicle, is that contract. And it cannot exceed the principal amount in the return of that loan. So it protects those who are experiencing hardship from individuals who may want to capitalize on their despair. But commerce and trade and investment, the loan is not the agreement to be used to facilitate those. There are specific agreements that are halal, and that actually create the sharing of risk, where Islam is very big on. So riba is also the creation of profit from nothing, creation of something from nothing. And only Allah subhanahu wa ta'ala has the power to create something from nothing. Only God has that power. Mankind should not have that power. So why? Why is this topic, why is Islamic finance so important? Why does it matter today more than ever? Let's quickly go through kind of what we see around the world today. You have rising inequality, rising debt, rising poverty, rising unemployment. You know, the richest 10% of the population hold 86% of the world's wealth today. According to UNICEF, 30,000 children under the age of 5 die every day due to debt. We have poverty rates that are skyrocketing. Here at home, 650,000 people are homeless in the US, the richest country in the world. You have rising unemployment. An estimated 210 million people are unemployed in the world today. So why do we have these issues? Why do we constantly see them on the increase? The root causes, we believe, have something to do with the modern economic system, the monetary system, the fractional reserve banking system, if you've ever heard of it. If you haven't, you'll learn something tonight. There's also this idea that it's value neutral, doesn't matter, it's valueless. Its only principle is to gain profit, period. There's a lot to unpack here, and I won't spend too much time on it because we have a lot of things to cover. But the root cause of this is constantly supported through a process of lobbying, of speculation, deregulation, and exploitation. So what is today perhaps illegal, and I can't make money off of it, I can actually lobby to make it legal. Hence, for example, one example is marijuana. You can see it today. And it's definitely a money maker with the banks and with everything around that industry. So most of the money in our economy today is created by the banks. A lot of us don't know that, but it is created by the banks. In the form of bank deposits, we are actually involved in that transaction. So if you look at this chart, it's very busy. We're not going to cover this tonight, but it is busy for a reason, because the complexity of it all may make you just look away when you should really focus. The part you should focus on the most is where those two boxes, where you see individuals and businesses actually interacting with commercial banks. In the form of deposits, we actually give fuel to the riba-based economy. And I'll show you how that works. So, fractional reserve banking. If you haven't heard of it, this is something to walk away with tonight that I think will open your eyes. Banks are supposed to be places where we put our money for safekeeping. That's really all they're meant to be, but they've evolved into something more. I'm going to take myself. I have $1,000. I deposit it into my bank. I'm consumer number one. My bank takes it and actually reserves 10% of it, but lends out 90% of it. $900 gets loaned out to someone I don't know, a business I may not support. I don't know who they're lending it to, but they do this. And they do this with riba. So it's a loan at interest to consumer number two, whoever that is. Consumer number two takes that $900, spends it on something, and then consumer number three who receives it takes that $900 and actually deposits it in the bank. The bank takes that $900 and repeats. 10% is reserved. $810 is loaned out. If you repeat this cycle just 3 times, $1,000 of real cash went into the system. We have $3,400 that's now essentially ghost money, but they believe it's there. So what we have is wealth that is created out of thin air through that repetitive process. And the fictional financial economy is over 26 times larger than everything else produced on this earth. You have the transfer of income and wealth from the 90% to the 10%. Brings us right back to that first slide of the inequality. 10% of the population are net receivers, while the rest are payers. So this is what I call essentially a value-neutral economic philosophy. What this means to the left of you here, on the left of the screen, value-neutral is whatever can make us money, we will pursue, regardless of the way we pursue it. We can deregulate, we can deceive, and ultimately we can create the instabilities that we've seen. In my lifetime, I've seen, bubbles and busts come and go. And there are others who've seen them at a more, numbered pace. But I recall the 2007, 2008 boom and bust. Florida was hit hard with that. I know that for a fact. the amount of deficiency judgments issued by banks coming after people who return their keys to their banks, knocking on doors later, 6 months, a year later, chasing them for the difference in what was not recouped from the sale of the house. That was actually a record in the nation's history. Islamic finance brings a different philosophy. It's timeless values. Values that are not changed, that cannot be changed by mankind, not through deregulation or anything. These are a set of values that are timeless. It regulates itself. There's transparency within it, and there's, as a result, a tremendous amount of stability that comes with it. So, how is it different? Let's quickly go through sort of the foundational principles of Islamic finance. It's first rooted in divine law. Again, the values are instilled in divine law. Cannot be changed. Economic justice, circulation of wealth, commoditization, and risk sharing are all part of the Islamic finance principles. What you tend to have is essentially transactions that are based on what we call investing, having skin in the game with the consumer, versus lending, which is sort of an arm's length approach. You have a win-win framework with Islamic finance. You're investing in real assets. You're not selling money for more money. You share in risk. There's just and fair profit and loss, while lending really leads to risk being transferred solely on the consumer, unfair gains and profits and losses, and so on and so forth. So when we were developing our program, in those 3 years of research and development, we delved into the concepts that are actually allowed in Islam, the contracts that we had at our disposal. One was called the Murabaha contract, which is a purchase and resale. I could purchase this podium for $100, refurbish it, resell it for $150, and have somebody pay me back at installments, 3 installments of $50. That's Murabaha. There is to the far right Ijara, which is lease. Anybody here is renting, and I saw, was it 70% of the room or so? 65, 70% of the room raised their hand, they were renting. You're essentially in an Ijara contract with your landlord. You're using the property, and you're paying for that usage. And then there's Musharaka, which is partnership. And we highlight this because this was the type of contract that our scholars and our founders felt was the most suitable for the US market. But not any kind of musharaka. For those in the room who speak Arabic, you probably think of musharaka and you think of what's really on the left there, shirkat al-aqd. Shirkat al-aqd is what we call joint enterprise, which is a partnership that we go into for business, for venture. That is not what we use to facilitate home ownership. We use something called shirkatul milk. Shirkatul milk is joint ownership to facilitate full ownership over a period of time for one member of the partnership. That's the goal of shirkatul milk. It actually comes from inheritance laws, as I learned from some of our scholars. When two siblings inherit the home, let's say, of their parents who passed, they must decide whether they're living in it or not. They must decide what are they going to do with it. One perhaps wants to live in it, the other wants to sell it, use the money to buy something else. So they must make an arrangement to transfer ownership, and that's where our program was derived from. That's the root of it. So why musharaka? Well, first of all, when they looked at Murabaha, it had a litany of issues and challenges for the US consumer. You couldn't structure a Murabaha that's actually feasible and compliant with Islam and compliant with legal laws of the US. So there's even no path for securitization, the creation of securitization, security from this program. So that was ruled out. Ijara, they said the leasing doesn't attain any ownership until the very end of the arrangement. That's a high level degree of risk on behalf of the consumer should something happen to the institution that's actually leasing it. So they ruled that one out. And then there's musharaka. It's very equitable. Ownership is established from the start. The transfer of ownership actually happens in real time. And I'll explain through these next couple of slides. So you should pay attention here because this is really what makes the shirkat al-milk, the musharaka, the specific kind of musharaka we're talking about, functional in sort of an example like this. First, our consumers are regarded as home buyers in the beginning. You are a home buyer. You're supported by us through a pre-approval letter that has undergone an underwriting review, and you're issued this pre-approval letter that is as good as cash. You can take it to your real estate agent, shop for a home, put an offer on a home with this pre-approval letter to substantiate your offer. So the home buyer and guidance agree through this process to become co-owners in this property. Once you close on the property, we're effectively co-owners in the property. I know the example here shows 70-30 and the pie chart to the right, but you can put down your payment. Your down payment can be as low as 3%. So don't let this discourage you in any way, shape, or form. So, but just for simple math, let's assume you brought 30%. We bring 70%. Our 70% of the value of the home is not represented in a loan to you. It's represented in actual ownership, our ownership in the property. We create an LLC that goes on the property. That represents our ownership. So each party's ownership is determined essentially in the beginning by the down payment amount that the consumer brings. Number 3, you begin making your monthly payments. You've agreed to a certain term. You decide on the term, a 30-year term, a 15-year term, a 20-year term, to buy us out. That's the term. And you start making your monthly payments. Your monthly payments consisting of two amounts. One is the utilization fee. The utilization fee represents your usage of our portion of the property. We're allowing you to use the property. We're allowing you to have exclusive use and enjoyment of the entire property, including our portion of it that we own. So we're going to charge for the usage of our portion. Now, clearly, you're buying us out each month because that's the second part of your monthly payment. It's called the acquisition amount. The acquisition amount actually acquires from us every single month our shares, which decline. As our shares decline, your utilization amount declines. Your monthly payment is fixed, but the amount that goes towards utilization each month declines while the amount going to acquisition actually increases, giving you quicker ownership. At any time in this process, our customers can buy us out without any penalties or any fees. So that's an important point to make. You don't have to be in the contract for 30 years, 15 years. You have a right to buy us out at the original amount at any time. The goal is for you to become a home owner. That's the goal. A sole owner of that property. That's our sole goal in this Musharraf structure. Now, how does that compare to what you have out there? I know there's a lot of renters in the room, so if you were to go to a bank or a financing institution or mortgage company and take out a conventional mortgage, what they make you sign is something called a lender agreement. That lender agreement characterizes you as a borrower of the funds they're bringing, and they are the lender. Clearly, from the beginning, you signed a loan agreement. With guidance, you don't sign such an agreement. You're signing what's called a co-ownership commitment agreement, establishing your ownership, establishing our ownership. That's one major difference in the very beginning. Over time, the borrower purchases the home from the money they borrowed and then starts to make monthly payments to the lender to repay the debt plus the interest on the debt. Over the course of that loan, the borrower repays the debt in full and then receives the property as a sole owner of the property. So, what does make us different? Somebody asked me that earlier today as I was checking into my hotel because they were curious about this event that we were coming to. And the first thing I said was, well, we actually co-own the property with you. Meaning that should something go wrong, and we, let's say, default, and we need to sell the property, that if there's a loss in the proceeds of the sale, we don't have what's called recourse in the industry term. Meaning we don't come after you for the difference if there's a loss. That's an important point. Florida is a recourse state, so if you default and the bank sells your home but they don't recoup what they originally loaned you, they will come after you. No matter where you go, you can leave the state, but they'll come after you across borders for the difference. And any interest that might be accruing over that term, over that period. This is an important point. We never loan you money. Our money is in the actual asset, the home. So if it sells for less, we take loss. We share in the risk with you in the event of a natural disaster, and I know here in Florida it's hurricanes and other things. If the home is fully destroyed by a natural disaster, or for example, eminent domain sets in and you're forced out of the property, the proceeds that come either from insurance or from government, if they fall short of the original value of the home, we would take those funds and actually distribute them according to our ownership shares at that time. So we share pro rata in the loss if there is a loss. We don't do that on the upside. If there's a gain, all the appreciation in the value of the home goes back to the consumer. So this is something very significant, very different from anything you've seen out there in the industry. This is true risk sharing. There's also a late payment fee that is capped. We don't make a profit on our late fees. It's important to note that banks and other institutions, when they charge you on a late fee, it's a percentage, and typically most of that money gets pocketed for profit, where that, from our values, is not permissible. We charge a cap of $50, and that's done through research on what it costs us to remind you. So we can offset the cost of reminding you that you are late to meet your obligation, and it's simply $50 as a cap. Something much different than what's out there in the industry. I mentioned we are not a bank, and so let's continue. Now, the last thing I'll cover here is this. We've been around this, Imam said, for nearly 25 years. So we're established, we're a very mature brand in the industry. We're the leader in this space because we decided to do it correctly from day one. We spent millions on this program, and we continue to grow every single day through educational seminars, presentations such as these. We're going to be here to answer all kind of questions for you tonight, regardless of how late it gets. We don't have anywhere to go. I'll leave you with some of these things on the screen. Guidance has been featured in so many different articles and so many different publications. We've become essentially a household name. More recently, in 2024, we were regarded as a vanguard in the U.S. housing industry by Housing Wire's Vanguard Awards. Housing Wire is the trade press for the U.S. housing industry, and our CEO was regarded as CEO, and the company is regarded as an actual vanguard in the U.S. housing industry for the impact we had on the U.S. housing industry. So that was something that we wanted to share and wanted to present to you all. But we're very, very happy to be here. We're very, very pleased. Thank you, Imam Masri, for hosting us tonight. And like I said, question and answers will follow later tonight. So if you have them, write them down. We'll be here to answer them. Thank you very much.
Assalamu alaikum wa rahmatullahi wa barakatuh. I really lose the mic again, guys. Assalamu alaikum wa rahmatullahi wa barakatuh. There we go. All right. Thank you, Hussam, for this very informative presentation.